Okay, let's unpack this. Imagine looking at a company from, well, two completely different angles. Today, we're diving deep into John Keells Holdings PLC, a true powerhouse in Sri Lanka's economy. Our mission is to explore their recent performance, but what genuinely makes this a fascinating deep dive is that we have their official financial statements from the period ending June 30, 2025. And alongside that, some sharply critical reports painting a very different, almost contradictory picture. It's almost like a tale of two companies, and we're here to lay out both narratives for you.
Exactly. What's truly intriguing here is how the same set of circumstances, the same company operations, can be interpreted so differently, depending on the lens you're using. We'll walk you through the numbers and the narrative so you can see the full spectrum.
Okay, great. Let's start with John Keells Holdings' own report then. This is for the first quarter of fiscal year 2025-26. They're certainly touting some impressive growth. Group revenue hit Rs 114.15 billion. That's a substantial 64% increase.
A huge jump.
Yeah, and EBITDA jumped 69% to Rs 12.97 billion.
That's right. And just to clarify for everyone listening, EBITDA, that's earnings before interest, taxes, depreciation, and amortization. It's a key measure of, well, operational profitability. The report attributes this significant growth primarily to their retail industry group,
Ah, yeah.
especially their supermarket and new energy vehicle, or NEV, businesses. The supermarket business alone saw, I think, a 13% growth in same-store sales.
Right, driven by a 17% increase in customer footfall, they said.
Exactly. Big increase in people coming through the doors.
They also highlight major milestones like the West Container Terminal, WCT1, that's a crucial new deep-sea terminal of the Port of Colombo, exceeding expectations in its first full quarter. And of course, the highly anticipated launch of the rest of their big integrated resort, City of Dreams Sri Lanka.
Right. That launched August 2nd, 2025. We're talking the casino, the ultra-luxury Nuwa Hotel, a premium shopping mall, the whole package finally opening.
And based on all this, they even reported a profit before tax of Rs 3.11 billion. That's compared to a loss in the previous year, so on paper, it sounds like a massive turnaround.
It certainly looks good at first glance.
But here's where the narrative gets completely upended. Other sources present a starkly different view. They're suggesting JKH is facing an unprecedented twin crisis.
Right. And this raises an important question about how much weight you put on those headline figures, doesn't it? These critical reports allege a multi-billion rupee customs scandal. This is directly related to JKH's new energy vehicle business, John Keells CG Auto, or JKCG.
A customs scandal. What's the allegation exactly?
The accusation is serious. It's that over 1,000 BYD ATTO3 vehicles were allegedly underdeclared, claiming they were 100 kilowatt variants instead of their actual 150 kilowatt.
And the motive?
To evade customs taxes, potentially around $3 billion. That's a significant amount.
Wow, okay. And beyond that alleged scandal, are these critical reports highlighting any other major financial vulnerabilities?
Oh, absolutely. They point to, get this, a staggering Rs. 210 billion, that's about USD 700 million in total debt.
700 million US dollars. That's huge.
It is. And what's particularly concerning, according to these sources, are their annual interest payments of Rs. 18.4 billion, coupled with an interest coverage ratio of just 0.8 times.
0.8. So what does that mean in simple terms?
Well, to put that into perspective, an interest coverage ratio of 0.8 means their operating profits aren't even enough to cover their debt interest payments. It's generally seen as a very precarious position for a company.
Okay, that paints a very different picture from the profit before tax figure.
It does. And if we dig a bit deeper into the numbers JKH did release, while the official report shows that positive profit before tax, the profit attributable to equity holders, that's the actual earnings shareholders can claim, was actually negative, a loss of Rs. 804 million.
A loss.
Yeah.
How does that square with the profit before tax?
It was heavily impacted by substantial losses from the City of Dreams Sri Lanka project company. That alone totaled a negative Rs. 4.19 billion loss, despite the project's official launch.
Right. And these critical reports, they don't pull any punches on City of Dreams, do they? They call it a catastrophe.
They do, and it's not just rhetoric. They allege the true costs are whispered to be over Rs. 400 billion, contributing significantly to these losses you see reflected indirectly.
And on top of the debt and project issues, they also mentioned external pressures.
Yes, things like potential Rs. 6 to 9 billion in annual losses from possible U.S. tariffs on Sri Lankan goods, and maybe Rs. 1.7 billion in annual costs from a new 18% digital VAT, just adding more pressure.
So you have alleged tax evasion, Massive debt, a flagship project potentially bleeding money.
Exactly. And amidst all these very serious allegations, the critical sources are directly calling for the resignation of Chairman Krishan Balindra,
On good grounds.
citing a gross failure of corporate governance and really a severe loss of public and shareholder trust because of all these issues coming to light.
So what does this all mean for you, the informed listener? This deep dive into John Keells Holdings isn't just a tale of two contrasting reports. It's a stark reminder that even seemingly strong financial indicators, like that big revenue jump, can sometimes mask significant underlying risks and, well, serious allegations.
Yeah, the real insight here, I think, is how quickly a company's narrative can shift, especially when external scrutiny starts to expose potential vulnerabilities. It's particularly potent when core revenue drivers, like the NEV business here, are implicated in scandals, or flagship projects like City of Dreams maybe aren't the roaring success they appear to be on the surface, perhaps incurring massive hidden losses. For you, the key takeaway is probably the absolute necessity of looking beyond just the official press releases. You really need to dig deeper to truly understand a company's health and the multifaceted nature of corporate performance.
It really highlights the difference between profit before tax and what actually reaches the shareholders, doesn't it?
Absolutely. That bottom line attributable to equity holders tells a crucial part of the story.
So, as you look at any company's performance reports going forward, what questions will you start asking yourself to uncover the full story, beyond just the headlines? Until next time, keep digging for the complete picture.